Hello learners, welcome to our today's lesson. We will be continuing from where we stopped. In our last lesson, we completed looking at source documents. Remember the topic is source documents and books of original entry. Books of original entry. We discussed in detail source documents candidates. We said that source documents are business papers. These are documents that give evidence of transactions that take place in a business. For every business transaction, there has to be evidence. This documentary evidence is what we refer to as source documents. Any form of transaction. For example, if the business buys goods, then there has to be evidence of such a transaction. And the evidence in that case is a receipt. When the business sells goods on credit to a debtor, there has to be evidence. In this case, the evidence is an invoice. When a business sells goods on credit to a debtor on credit, then the business has to issue an invoice to the debtor. So an invoice in that case is a source document. When the business pays salaries to workers in form of a check, for instance, when a business pays casual laborers their wages in cash, then the business has to raise a source document in form of payment voucher. So a payment voucher in such a case is a source document. So learners, we discussed in detail source documents. Today we want to continue the same subtopic, but we are going to look at the books of original entry. Books of original entry. So what are these books of original entry? Learners, books of original entry are books where transactions are recorded for the first time, for the first instance. And the recording of transactions in the books of original entry is based on the source documents. In other words, we use source documents to make entries in the books of original entry. These are books, and these are the ones we said are just documents, like a receipt, like an invoice, like a voucher, and so on. So these source documents are used to record transactions in the books of original entry, which are also may also be referred to as books of prime entry. Books of prime entry. These books may also be referred to as, day books. They are also known as day books. Another term that may be used instead of books of original entry is subsidiary books. Subsidiary books. They may also be referred to as diaries, business diaries. Another term is journals. journal. So this is where transactions are recorded for the first time. Transactions are recorded for the first time. Books of original entry. There are other books like the ledgers. Ledger is a book, but it is not a book of original entry. So I'm repeating, learners, we use source documents to make entries in the books of original entry, or the subsidiary books, or the diaries, or journals, or books of prime entry. Books of prime entry. Now I'm going to give examples of books of original entry, which commonly, in most cases, you find the term being used is journals. Journals. There are many types of journals. Journals. One is the sales journal. Sales journal. Number two is the sales returns journal. Sales returns journal. This may also be known as the returns inward. The returns inward journal. Return inward journal. Number three is the purchases journal. Purchases journal or purchases daybook. All right. Purchases journal or purchases daybook. Number four is the purchases returns journal. Purchases returns journal may also be referred to as returns outward journal. Returns outward journal. Another journal, number five, is the general journal. The general journal may also be referred to as the journal proper. Another term that is used interchangeably with the general journal is the journal proper. Number six, you have another journal. Number six is the cash receipt journal. The cash receipt journal. Related to the cash receipt journal, we have the cash payment journal. The cash payment journal may also be referred to as the cash disbursement. The cash disbursement journal. The cash disbursement journal. Number eight journal is the cash book. Cash book is both a journal and a ledger. This is a journal. Let me write both journal and ledger. Both journal and ledger. Both journal and ledger. Let me proceed here. Number 9. The ninth journal is the analysis cash book. Analysis cash book. Number 9, analysis cash book. This is both a journal and a ledger. Journal and ledger. Number 10 is the petty cash book. The petty cash book is both a journal and ledger. Journal and ledger. So these are examples of journals. Number 1, sales journal. Number 2, sales returns journal, which is also known as the returns inward journal. Number 3, purchases journal. Number 4, purchases returns journal, also known as returns in outward journal. Number 5, the general journal, also known as the journal proper. Number 6, cash receipt journal. Number 7, cash payment journal, which is also known as the cash disbursement journal. Number 8, the cash book. The cash book, I've said, is both a journal and a ledger. Number 9, analysis cash book, which is both a journal and a ledger. Then number 10, petty cash book, which is both journal and ledger. Journal and ledger. So learners, I want us to discuss each of these journals in turn. We pick one at a time. Let's start with the sales journal. Sales journal. And let me mention that before I look at the sales journal, that these journals are normally prepared where a business has voluminous transactions. Transactions running into thousands or hundreds. For small enterprises which record few transactions, then sometimes the journals are not necessary. The business can post the ledgers using the source documents. Can just use a source documents to prepare the ledgers. But where transactions are many, then the business may be forced to have journals. All right. Remember, we've said journals are diaries. These are diaries. So the business will have to have diaries where transactions are many. So let us have a look at the sales journal. Sales journal. Sales journal. What is a sales journal and what is the purpose of a sales journal? Sales journal. So learners, a sales journal, you can write sales journal is used to record all credit sales made before they can be recorded in the ledger. Before they can be recorded in the ledger. So a sales journal is a journal or a diary that is used to record credit sales. Credit sales. When the business sells to customers on credit. The customers who buy from the business on credit are also known as debtors. When the company or business sells to debtors, then such transaction is recorded in the sales journal, and the source document that is used to make entries in the sales journal is the sales invoice. The sales invoice. Remember what we refer to as the outgoing invoice. Outgoing invoice. The invoice that is issued to the debtors out there is the source document that is required when making entries in the sales journal. So a sales journal, I repeat, is used to record all credit sales made before they can be recorded in the ledger. In the ledger. This ledger is used to record credit sales for the first time. For the first time. Okay? For the first time. That's why it is known as Book of Original Entry or Book of Prime Entry. Now, the total, you can put down another important sentence, the total of the sales journal, the total of the sales journal is posted to the sales account, in the general ledger, the total of the sales journal. So a sales journal, as we'll be seeing later, is a book that is used to record invoices that are sent to the debtors. So the total of the invoice therein is posted to the sales ledger. This is the sales account. It's posted to the sales account in the general ledger. The general ledger. So we will have list of the debtors in the sales journal. So the total will be posted to the general ledger, sales account in the general ledger. Then we have the individual debtors. You can put down that sentence. Individual entries in the sales journal are posted to the relevant debtors accounts in the sales ledger. The individual entries in the sales journal. Individual entries in the sales journal are posted to the relevant debtors accounts in the sales ledger. In the sales ledger, we'll be illustrating shortly. We are going to do an illustration to help us understand what I'm talking about here. But before we do an illustration, I need to mention that the entries that are entered in the sales journal must be credit sales, not cash sales. So cash sales are not recorded in the sales journal. Number two, the sale of fixed assets on credit are not recorded in the sales journal. Sale of fixed assets. Sometimes the business may decide to sell its fixed assets like motor vehicles, like land, buildings, furniture, and so on credit. When the business sells such fixed assets on credit, such sale on credit is not recorded in the sales journal. What is recorded in the sales journal? These are goods that are bought and sold, in the normal activities of the business. The sales, what has been either purchased for sale or what has been manufactured within the business for sale. So these are normal goods. The stock is what we record in the sales journal and not the sale of fixed assets on credit. Not the sale of fixed assets on credit. So those are very important points to note. To remember that the sales journal only records sales credit. The credit sales. The credit sales are not cash sales. Number two, the sale of fixed assets on credit should also not be recorded in the sales journal. And I've also made 2 points here, very important. The total of the sales journal is posted to the sales account in the general ledger, and the individual entries in the sales journal are posted to the relevant debtors account in the sales ledger. So having defined sales journal and given the purpose for the preparation of a sales journal, I will now move to show you the format of a sales journal. Format of a sales journal. How does it look like? Format. The format of a sales journal, which may also be referred to as sales daybook. Sales daybook. The format. The first column is the date, followed by details or particulars. Then the third column will be the invoice number. The fourth column is the ledger folio. Then the last invoice, the amount, is the amount. So these are the columns that you will find in a sales journal. 1, 2, 3, 4, 5 columns. 5 columns. So we have the date column. Now this column indicates the date when the goods are sold on credit to a debtor, the date when the transaction took place. This is the date when the transaction took place. The date when the transaction took place. Then there is the details, the detail column. Now, the detail column shows the person to whom the business sold on credit. This shows the person or business to whom the company sold on credit. This person to whom the business sell on credit is what we refer to as debtor. So in other words, under this column we'll have a list of debtors, and this column you have said is the date when the transaction took place. So this will show the list of debtors. These are persons to whom the business sells on credit. These are persons or individuals who owe the business. Then there is the invoice number column. The invoice number column. Now, this column shows the serial number of invoices that are issued to the debtors. It shows the serial numbers of invoices issued to the debtors. So when the company or business sells to a debtor, the name of the debtor is recorded under details, and the invoice number, this will show the number of the invoice that was sent to the debtor, the number of the invoice sent to the debtor, because invoices have serial numbers. Then we have the ledger folio column. Ledger folio column. Ledger folio column shows the page. It shows the page on which the debtor's account is found in the ledger. Let me write. It shows the page on which the debtor's account is found in the ledger. The ledger folio column, this column here, it will indicate the page on which this debtor's account is found in the ledger. Because taking you back, learners, I had mentioned here that individual entries in the sales journal, like this one, the individual entries are posted to the relevant debtor's account in the sales ledger, are posted to relevant debtor's account in the sales ledger. Now, learners, this sales ledger is a book that contains the accounts of all debtors of the business. So if there is a debtor here, say is known as Amuriodo, say the debtor here is called Amuriodo. So this Amuriodo being a debtor, you may find that the Amuriodo is on page 11 of the sales ledger. So when recording, you indicate where is this Amuriodo's account found in the sales ledger, because a sales ledger is a book. It's just a book, all right, where all debtors' accounts are recorded. So individual entries in the sales journal are posted to the relevant debtor's account. Now, after recording individual debtors in this account, accounting does not stop there. We'll be seeing later what happens after making entries in the books of original entry. This is a book of original entry. Later, these accounts or these debtors are to be posted in the sales ledger. Now, for that to happen, we have said when recording the sales journal, you have to ensure that the pages are shown where the ledgers can be, the debtors can be located in the sales ledger. Then the last column is the amount column. Amount column shows the amount the debtor is supposed to pay. Because when you sell to a debtor on credit, at some point in future, the debtor has to pay. And that amount that the debtor has to pay is shown in an invoice. Remember, we said an invoice is a source document that is issued from the seller to the buyer, informing the buyer of the amount that he is supposed to pay. So the sales journal will show the name of the debtors and also the amounts that the debtors are supposed to pay the business, So this is the format of a sales journal. It has how many columns? The date column number 1, details column number 2, invoice number column number 3, the ledger folio column number 4, and the amount column number 5. So learners, this is a good chance now to have an illustration, and before I move into an illustration, I want you to go through the video once more. All right, we'll take a break so that you go through the video once more. Try to understand what I've been saying, because remember, we learn through repetition. Go through the video. I've introduced the books of original entry in this video. I've defined what are these books of original entry. I've given examples of these books of original entry, which I said are also known as journals. These books of original entry are also known as diaries. They are known as subsidiary books. They are also known as day books. I've listed examples of the journals, 10 examples. The sales journal, the sales returns journal, the purchases journal, the purchases returns journal, the general journal, the cash receipts journal, the cash payments journal. We have the cash book, which you said is both a journal and the ledger. There is the petty cash book, which is both a journal and a ledger. Then there is the petty cash book, both a journal and a ledger. Then I have picked the first journal, which we have discussed in this lesson, the sales journal. I have defined what a sales journal is. I have given the purposes of a sales journal and what happens after preparing the sales journal. The totals on the sales journal, I've said, are posted to the sales account in the general journal. We've also seen how the individual entries in the sales journal are posted to the relevant debtors accounts in the sales journal. I've gone ahead and given the format of a sales journal. I've said there are 5 columns: the date column, the details column, the invoice number column, the ledger folio column, and the amount column. I've explained what is recorded in these columns. The date column, I've said, is the date when the transaction took place. The details, I've said, shows the list of the debtors, Then the invoice number, this is a serial number of the invoices that are issued to the debtors. Then the ledger folio is a column that is used to record the page numbers where the debtors account can be located in the sales ledger. Then there is the amount column, which is the amount of money that the debtors are supposed to pay. So go through the video again. When we meet in our next lesson, we are going to look at an illustration of a sales journal. Bye-bye.